All right, we're live, guys. On air, new week, new episode. Let's uh let's start out the way we always start out. Have a look at what the market's doing. I'll share the screen for the cryptocurrency heat map. Here we go. Bitcoin flat
Flat, yeah, flat, stable coin.
out. Stable coin. Nice. Uh yeah, bit of a rainbow.
48, 48 club token. Uh, Had to squint to see that one. I'm not
Where
40. I don't know. I don't know. Below Caldera. That's interesting. I don't know
okay.
what a
Nice.
48 club token is. Um, yeah, I mean, ETH is up though. That's always nice. Yeah, ETH on a run.
Looks a
I
bit
don't.
like a roulette table, no? It's
Exactly.
either you're on green or you're on red.
Uh,
Pretty 50-50.
Yeah, you could
there we
could
go.
it's a coin flip basically.
Yeah.
Well,
I think
yeah,
it,
yeah. I guess by market cap, yeah. I think by market cap, I think it's a coin flip. I think most of the tokens are in the red though. But ETH like ETH carrying
Mm.
yeah,
And
for
BNB.
sure.
BNB. Yeah,
It's
yeah.
it's
BNB
killing it.
new all time highs. Wow.
Yeah.
New
Something we
all-time
can't
high,
see on
bro.
this one is pump. It's up 25%.
Yeah, I think it's
Look,
back to like 0031. Oh, yeah, yeah, yeah. 0030.
Oh, never
Okay, yeah.
mind. That
But
never
it's
mind.
because it's showing this like zoomed out chart, so it looks horrible. But yeah, it is up.
now
It's
it
up
looks
a good
great.
amount. Yeah, there we go. It needs more frequent
One day.
timestamps.
It's like 1 week.
Yeah, I mean that's what the buybacks will do. Like they kept it mysterious with the buybacks. They just started doing like 100%, like just allocating 100% of daily revenue to buybacks,
Okay.
without like committing to anything. So I think it's smart, like not commit, because now everyone's like, oh, maybe they'll keep doing this, for like 3 months, for a year, and then maybe they stop next week, right? But like the token can pump in the meantime. So I think they should like keep it um, vague
Good
with the
strategy.
buybacks.
Good
Yeah,
strategy. Look, guys, Athena.
Athena too. Yeah, yeah.
I
They got
mean,
their own
it's like
buybacks. A
40,
little bit of a different
40% up
mechanism.
on the week.
Yeah.
This one has been a runner. Have you guys seen latest Guy Young's tweets? It's USDE, which is Athena's stablecoin, the main product, is up 3 point something billion the last 20 days, which is higher cumulatively than all ETFs combined, which is insane because the ETFs have had an amazing run as well.
Jesus Christ. Should we talk about why?
Could
Yeah.
be.
Fill them in. Fill them in.
There's a lot of risk appetite, I think, right now. So that's why you see funding rates going higher. That goes and fills the gap between what we needed for a higher yield on USDE, which is the yield bearing token for USDE. It's now well over 10%. It was below Sky's USDS. So that's one of the key milestones we want to see for the buybacks activation. So that went higher as well. So there's a lot of things playing into USD's new demand, but
Mhm.
DeFi's funding rate, I think there's only a big player. We have this covered in the thesis. If you want exposure to stable coins, and there's only a few players you can do so, basically two right now, Sky and Athena. And Athena has done a great job. And right now, it just goes to show that fundamentals are playing with the price. I don't know what goes first, what went first. I think they were like kind of very side by side on this one. And of
Someone
course,
always knows, dude. Someone always knows first.
yeah, and what we cannot miss is that the buybacks from their foundation, they already started. I think it was an 80 mil clip that they did
Wow.
last week or very recently. and also stablecoin X, which is it's basically a digital asset treasury company, which for sure goes to DATs. These are basically, copycats of strategy, but each of
Right.
them have a basically different way of raising, different specifics, stockholder, all that good stuff. But this is it's been the largest percentage of the treasury asset market cap to what they raised. It's up to 8%, and the second one has been hype, which is up to 2%, which is 4x higher. It's a big multiple. Just for perspective, digital asset treasury companies now hold around 3% of Bitcoin supply. So Athena's first clip is basically like what the entire history of Bitcoin treasury companies have done times 2.5 ish.
Right.
That
And that's
goes.
collectively. That's like adding them all up, and this is just one company. But yeah, I think market like reacted to kind of even out that multiple pretty quickly. You know, so it was like yeah, definitely it was 8% at first. I don't know what it is now. Now it could be like 5% or lower. Yeah, I think it must be ENA might be a top 25 token now. Maybe it was top 30 a few days ago. So I'm not sure.
Not playing around. It's amazing. The other strong performer this week is, of course, our our dear friend, um, Ethereum. Let's
Dear
go.
friend.
I mean, isn't it?
I don't know. I'm cool with him. Like, I don't know if he was a dear friend, but
Oh
I don't know. We're
damn,
cool, I guess.
that's cold.
But yeah, yeah, that is pretty crazy. Yeah, blowing. You just had ETH blowing BTC out of the water with the inflows. I don't think. Yeah, it's at a scale that we've never seen on any given week before. So pretty significant. Like, yeah, I just don't know. Like, I don't really see the like momentum. So like, it seems like there's still a lot of appetite for money from like traditional markets to just keep flowing in. We'll see like how long it can
And
continue.
do you think there's a rotation going on here as well, like guys going out of BTC into ETFs?
Um, I don't
Because they got
I don't know.
outflows.
Yeah, I mean, I'm not really sure actually. I don't know. Maybe we can have yeah, someone from one of the ETF providers provide a little more color. Like, it's not completely
Hmm.
transparent. So yeah, my guess would only be speculation. I would be inclined to say like not. I don't know. Like, not really. Like, I don't have reason to believe that. Yeah, people are actively they're just two distinct assets. I think like the BTC. Um, yeah, I'm kind of surprised that the ETH narrative has kind of performed this well. Like, in attracting capital from outside of crypto. Like it just doesn't seem like people would actively be exiting BTC for ETH, but that's just my guess.
Okay, that makes sense.
I'll
Um,
add there. I think one of the reasons there was underexposure, both from crypto native funds, which were bearish. I think they were bearish. At least that's what the timeline and some surveys related to the matter
Mm.
basically came out with. So you see the chart from Crypto Insights Group data, which is a company that gathers information from the top tier funds in crypto. Collectively, $3 billion of AUM basically fill up these surveys on a monthly basis. If
okay.
there's a question every month that comes up, what do you think ETH price will be in 12 months? It was basically at an all-time low at I don't know, like I won't say the exact number, but it was an all-time low for this survey, and that marked the bottom for ETH essentially. It's
Well,
inversely correlated to price. So I mean, yeah, it was correlated to price. So now it's going back higher. It's not an all-time high yet. Like it's not the survey all-time high, but it's going higher. So the managers are backing. I think they're back into ETH. That's why they're shilling the price essentially.
Nice. Well, let's see how much higher we can go, um, or our dear friend can go, should I say, Daniel?
Okay.
Um,
Sure.
awesome. All right. Okay, that concludes the hot news for this week. So let's get the show started properly. Welcome everyone to a new Market Cap episode. Market Cap is where funds and firms provide their insight on the latest market developments to you, our audience of institutional investors and traders, as well as industry professionals. I'm your host and moderator, Stefano, Director Institutional Services at Alea Research. With me, I have Daniel, our Research BD lead, and Mariano, our analyst specialized in valuations and market reports. And we're joined by Carl, co-founder at Areta. Carl, welcome to the show. Please fill us in. Um, Tell us about Areta. Give us a little introduction.
Definitely. Thanks, Stefano and team. First of all, thanks for having me. And more than anything, as a representative for Areta, it's great to be on the show. Always great content you put out there. And I think it's one of these few very relevant sources of information and, just to keep people updated on what's going on, and good synthesizing format also for everyone that's short on time, staying up to the trends and, well needed. So thanks for putting this always together, and also very grateful to be here with you today. Yeah, briefly on Areta. I mean, we're one of the leading investment banking firms focused exclusively on the crypto space. We advise clients across pretty much three verticals: M&A, capital markets, and on-chain services. Happy to go through each of these, but I understand the focus of conversation today is really on the M&A part, given the big uptick in M&A volume and activity over the last 2 quarters. And yeah, I mean, I think it's fair to say that we're in M&A season in crypto, and want to obviously feed you guys and your audience into what we're seeing on the ground, over the last couple of weeks, and then certainly where we see the market headed for that. On me personally, we founded the business almost 4 years ago now. Before that, worked at Blackstone's private equity group together with my co-founder for a number of years. And so I've previously worked on larger scale industrial and tech acquisitions for the largest alternative asset manager. And prior to joining Blackstone, worked through the investment banking umbrellas at JP Morgan and Deutsche Bank. So fair to say corporate finance, born and bred, and started a mission to bring those institutional financial services to a crypto space, which has been a great ride. And I think we're ever more grateful for the opportunity we're getting and partnering with great minds, great founders, great management teams, in institutionalizing the space, and then also contributing our fair share to what we feel is well needed maturity and institutionalization. And I think all four of us on the call are sort of on that mission together, and in the same ship on that front. So let's chat
Yeah.
M&A, and what else is on your mind?
Yeah, funny. I was going to echo that indeed, like bringing services of quality that players are accustomed to in traditional markets and bringing them to this industry. I think that's both our missions here. And it seems like you definitely have the background to do that. It will be interesting, this conversation, as you have basically that comparison material, like you have that background so you can pretty much tell us like what the differences are in M&A specifically, between traditional markets and our industry. And as you said, like you basically read our mind. I think like for the last couple months, I've been thinking it would be so interesting to have someone on to talk more about these M&As that are going on, because it's pretty much on a weekly basis that you hear these big acquisitions from very crypto native companies like DYDX, but also sort of like crypto adjacent companies like Robinhood making mergers within our industry. So definitely like the backdrop is perfect for it. So yeah, indeed, we've seen that rise. Maybe it's a good starting point to kind of compare, because like as you said, yes, things are heating up, but where are we in sort of terms of where crypto M&A stand compared to where it's at in traditional markets.
Yeah, totally. And maybe just, to give some numbers, but I think the short TLDR is we are obviously still a small industry. That's certainly true for M&A volumes and the broader M&A spectrum. And, looking at numbers, Q1 M&A volumes for the crypto space were like 2.3 billion just for the fintech space. So not even talking about like even larger tech industries or so, is 56 billion. So you get a sense of where we really are now. In Q2 you had the Coinbase Deribit acquisition, so we're closer to 5 billion in Q2. But just for order of magnitude, we're still tiny on M&A volumes, but these are obviously also given so how how close we are as an industry. These deals are currently really shaping, I guess, the strategic paths for some of the leading businesses within our sector. And it's great to see those in real time and really follow these along, right? In other, I guess, more dispersed industries, you might not even be following our sector. People might not even be following each and every single transaction, but in crypto, it really feels like every week that we see those deals, everyone is talking about it, everyone is seeing those, and you really become visible by being active in M&A. And I think that's also partially what's driving, people to go out now again and be active as a buyer, right? And I think what differentiates us most still, or where we still lagging to traditional industries, and what is also explaining some of these numbers and really the size differential and market opportunity to date is first and foremost the buyer landscape. In M&A we always say businesses are bought, not sold. But for people to actually go out and buy businesses and strategically think about buy versus build decision, you need a healthy buy side, right? And I guess we as a business started in the bear market, where obviously people had other issues within the crypto space than going out and making acquisitions. So for a long time, from 2022 to almost way into 2024, you saw acqui-hires at best, some distressed deals, but really people were focusing on cleaning their own house and making sure that they're set up for a healthy future themselves, not to add, I guess, bandwidth or products. So what you see now going later into the cycle is that in the short term you get a much healthier buy side by people just having made money. That's especially true for transaction or volume driven businesses, right? Markets have picked up about 12 months ago or 18 months ago, and people have had a good time, and now especially after some rationalization, do have the capacity to also go out and be acquisitive, be aggressive again. And that's what we're seeing. So this is a bit cyclical. Also cyclical on the buy side is typically those large non-crypto native organizations looking to do moves in crypto, right? A bit counterintuitive, because all of us that we see things through the cycle, you would expect them to be especially aggressive in those downturns when nobody cares, there's little competition for deals, right? And then they can position themselves for the long run. But it's just not how the industry or how these dynamics play out. For boardrooms to get excited and this to be top priority for some of the larger players, crypto has to be top of mind, and crypto has to have certain momentum to be relevant for their agendas. And this is, I think, what we're now seeing on stablecoins, what we're seeing on payments, and there I think we're ripe for some more acquisitions. So yeah, I think that is cyclical, and then I think we just have a long-term, addition to the buy side with just the like just the crypto native organizations becoming bigger and just more significant with the amount of IPOs that we're currently looking at, and some of them also playing an active role in consolidation. In the next 2 years or so, we'll have a much wider, much bigger buy side group of people that are actually able to and willing to go aggressive on M&A. So yeah, lots of growth ahead. And then I don't expect us to close that gap with the broader fintech sector in the next 2 years or so, but
Yeah.
certainly I guess that's where we see the market headed.
Interesting. I mean, yeah, you said maybe it would make more sense for them to come in, kind of swoop in during a bear market and scoop everything up, but that's not how it works. Obviously, we
Exactly.
saw that last cycle, like the big companies start paying attention when everything is up, and then Adidas wants to come in and
Yeah.
do like NFTs and stuff like that. Kind of, we're now maybe seeing like a more mature version of that. But that's great. Then they can pay a premium and everybody's happy, right? So I think that's no problem for at least for us in the space. Um, let's talk a little bit more about like get into like these actual M&As and how they go. Of course, in traditional markets, man, like you have well, your firm is specialized in, well, one of the specializations is in M&As, but in traditional markets, I mean, you're one of the few I found in our market specialized in that. In traditional markets, you have like whole corporates dedicated to that, so it's like a well-oiled machine, and like it probably works like clockwork.
Mm.
I can imagine that in crypto, things are still being figured out more, but that's kind of an assumption on my part. I'm curious, like, can you walk us through like how these M&As actually go down?
Yeah, no, totally. And I think you hit up on a couple of interesting differences that we've seen from really the giga cap of transactions at Blackstone to now what is most often a small and mid cap transaction in crypto, with the exception of let's say the five or so $1 billion deals this year. And there's obviously nuances, and I think we have taken a business decision to really focus and specialize only on the crypto space because of the intricacies and the specialty of our sector, which we love, and then we wake up for in the morning. But it's just a bit fundamentally different. Like the stakeholders you interact with, um, you know, typically, like on average, I would say, are much younger than in some more traditional industry, quite obviously.
Yeah.
That comes also with a bit less experience at the one or other side. And so people like us are, you know, really in the driver's seat on some of these conversations that you might expect. It's also obviously, I mean, very decentralized, remote space where geography has almost no meaning other than it determines the time zone that you can take calls or that you jump on calls during the day. So,
Does that
whereas,
impact how deals go down or the dynamics of a deal?
yeah, I mean, look, in traditional markets, you would visit each other's offices.
Yeah.
You speak even about a nice cross-border precedent if you've sold a business from the UK to Germany, right? Like that's something cool. For us, we've never actually had a deal that would happen in the same country. It would be almost weird because people are everywhere. People typically also try to extend reach or build regional hubs somewhere else, and then some of these M&A are obviously also driven by geographical expansion. And so geography is this really tricky one. And almost all deals like are obviously like are driven remotely for the most part. Some are even entirely remote, where even management teams haven't met in person. And we're talking obviously also decently sizable acquisitions. And this is just something that, going into the space, I would have not expected to be so severely different just in terms of process. But here we go. And, it's definitely interesting, how transactions are getting done. I think the other part that, you know, or why we determine or why we decided to specialize so specifically on the crypto space is just the amount of novel business models and innovation we're seeing that would be just fundamentally hard to grasp for people that have not been with us as long as we, right? And every cycle you have new concepts, you have new narratives, and the way people monetize, especially in token ecosystems, is just sometimes fundamentally different to the bread and butter in traditional markets. And so we feel like this will need people in our position to understand those business models and the different stakeholders as well, sometimes DAOs, foundations, to be or to act as a proper steward for some of these transactions. And then also obviously the involvement of tokens is a whole new era for M&A, right? And so there I think we're really just scratching the surface of what is possible, but token M&A is also one of the big opportunities and upsides we see for the next decade.
Right. Token M&As. Yeah. So I think I'll be curious to ask, like, I think you kind of discussed this earlier, but a lot of the M&A, it's like big exchanges buying like a smaller exchange, Coinbase, Deribit, like Robinhood, Kraken both bought a couple of these kinds of things. But then I think more recently we're seeing M&A involving like actual decentralized protocols, right? What are they? Kraken or the Kraken's chain,
the Ink blockchain,
buying Vertex, USDM stablecoin getting bought by Anchorage, I believe. And then you also have on-chain apps actually acting as the buyers themselves. Like Pump Fund, right? Buying was KOL Scan. So I guess like are you seeing like an uptick, I guess, in decentralized like on-chain products, whether it's apps or protocols, like in these M&A deals, whether it's like as a percent of total deals or as a percent of like total M&A volume?
Yeah, no, it's that percentage is still tiny. Certainly in terms of volume, I think you're right. The most plain vanilla deal today is an exchange. That is the healthiest buyer group we have. Those are the guys with big corporate development teams that know exactly what they do. That is very similar to what you see in traditional markets. Very sophisticated teams having a clear mission on what they want to achieve with M&A and then going to execute it. Also very aggressively if you just look at Coinbase, Kraken, and so that's who's driving the M&A wave this cycle. But more and more are we seeing some of these more institutional structures emerge also in the on-chain world. You also had Ondo, for example, doing an acquisition of a US broker. And, there is sophisticated and institutional players in the on-chain world that also see an opportunity in actually utilizing their token, which otherwise, sits in their treasury, can be used for other growth areas. But M&A is probably one of the best also ways for you to grow your business, certainly in terms of other verticals, and align basically the acquired businesses with your tokens. Feels like a zero cost of capital acquisition to you, and could actually boost and make a significant difference to the future of your ecosystem. So we've been quite, I think, convinced of that move to happen. I think we've been that too long for now, and would have expected more of this to happen way sooner. Now we start having some conversations on that front. We start seeing more people also acting on it, and maybe it's just not this cycle, but certainly I think may the next cycle come, we'll see a lot more token M&A and on-chain organizations utilizing M&A as one area for growth.
Yeah, I think it's an interesting point. I mean, these treasuries mostly consist of like stable coins and then like their token, both of which kind of just sitting idly. Like we've covered
exactly.
Stable coins and then sometimes they have like BTC and ETH as well, which is kind of just sitting idly, kind of unproductive. But the native tokens definitely, and I mean, maybe they are, but it's not like transparent, right? Like some of these teams like Jupiter making acquisitions and it's not really like disclosed. You're kind of guessing, right? I guess you'll be more privy into that kind of stuff. But yeah, I definitely think that's like an untapped area for sure. That maybe it might be like if it does start happening, it might not even be like telegraphed publicly.
Yeah, I mean, typically still you see those deals being marketed also because they come with certain awareness, they come with certain positive perception, right? It's like, okay, you rather would want to be seen as one of these larger ecosystem players, as one of the consolidators that is trying to grow, that is doing strategic moves. And if also I think the narrative for an acquisition makes sense to the broader public, then you may have a direct impact, right, of these transactions. And yeah, I think with the limited amount of competition on the buy side in this type of industry, at this juncture in the industry, I think there is a great opportunity for people to become active on the buy side, and I think more and more people now are feeling the same and are also acting accordingly. So yeah,
Nice.
lots of areas for growth.
What you said kind of reminded me of like what you always see in movies when there's a merger, like whose name goes first. It's like there's definitely like a prestige thing involved with making acquisitions and making the announcement and being perceived as a big player who can make those kind of moves. I was curious about like, okay, how do those moves how should I say that, sort of like evolve or like come into being or come to be, right? Like maybe it's interesting if you kind of walk us through the anatomy almost of like how these deals come about and the different stages. And I wonder also like, are they always initiated by the buyer? Is it something that maybe you guys as a firm also identify proactively in the market, like, hey, it kind of makes sense for these players to maybe merge or go together, or for these guys to be acquired by such and such party? Very curious about that.
Yeah. No, totally. And so on our part, we mainly work on the sell side, basically as the marketer for our clients. And then, I think that's probably how most, how many deals happen today, is that there is certain interest in a business, like the few businesses that perform well and that are attractive to people, right, are obviously on the map also for some of these larger buyers, at which point, management team or shareholders of that business considering an exit to their, to that company, right? And followed by that conclusion, you obviously try to optimize for value and transaction certainty in that process, right? And that's when people like us come in, right? Structuring the process, preparing the material so that everyone is that is easily digestible and obviously tells the story in a fair way and in a supportive way, to also addressing all the relevant buyers and people that may have a strategic interest in the business, and then drive a competitive auction process, to yield the best outcome for management and shareholders. And I would say that's probably the standard approach. You obviously, with the larger corporate development teams that we have in the crypto space, you also sometimes see very dedicated strategic efforts to fulfill a roadmap, let's say, for the company. And at that point, people have a very clear idea of which business they need at which point, and then they go out on the buy side to look for exactly that missing piece in their value chain. They could be speaking to a couple and then make a decision on which one is their preferred partner. They could also be in a working relationship with that business already and deciding to internalize that working relationship instead of partnering, and then proactively approach them from the buy side. And you can have a mix or a combination of both. Typically, these conversations and these processes unfold in a way that you would never expect beforehand. But the plain vanilla, I think, approach is prepare for a process, get everything nice and lindy, and then try to address the relevant people that you think could be a fit, and really also determine then who's ultimately a good owner for the business.
Makes sense. It sounds like kind of what I'm hearing repeatedly throughout this, right? It's kind of two flavors or two outcomes. One is either pure growth, and it sounds like those are typically horizontal, so like an exchange eating a smaller exchange, or they're more strategic, and then they tend to be vertical, so they're actually integrating a new part of business that allows them to actually expand their footprint, let's say, in the industry, not just get bigger, but do a wider swath of services. Is Would you say that's sort of a good way to think about it?
Totally. And I mean, we can make that very tangible or specific, right? Earlier this year, we sold the largest crypto exchange in New Zealand called Easy Crypto to the second largest exchange in Australia,
Uh,
in a very strategic move for them to grow into New Zealand as a geography, obviously adding geographical footprint, but also local relationships, and also given the geographical proximity, it made sense for them to expand into that market, and so gaining share and I guess reach as a business. You also see people, as you were saying, acquire for product or offering. We, for example, sold a staking operator called Friends Group to Swipe Group, Friends Validators to Swipe Group, for them to internalize basically staking operations and offer that across their portfolio. And you also see people acquiring licenses as part of M&A, and really sometimes talent, right? These, not always have to come in the form of an acqui-hire where it's really only about the talent. But if you have very, specific, a group of specific experts in, let's say, a product or in a white spot you have within the business, then you're certainly also willing to pay up to internalize that into your corporation. And yeah, those are definitely the key drivers for M&A. What is interesting now also on the public side, obviously, is this, I guess, the financial engineering becomes a bit more appealing, right? In the private context, yes, are you interested in financial performance and driving your P&L and increasing profits and general revenue? But it becomes a lot more interesting if you have a public share outstanding that's valued day, mark to market, where you have to provide quarterly updates, where your valuation multiples will likely be higher than that of a smaller business that you are buying. And so you, with that acquisition, also do some, or have the opportunity to do multiple arbitrage. And, that's where I think there's also quite some activity looming with more and more crypto players becoming public and, becoming more active also in financial engineering exercises.
Interesting. Can you explain a bit more about that?
Yeah. I mean, very simply speaking, if, let's say, a Coinbase, I don't know, through the cycle it's probably traded around 5-6 times, but it now trades around 10 times. And if you as a Coinbase buy a, regional exchange leader, let's say these trade at like 5 times revenue or so, then you pay 5 times, but for the public market, on the next quarter, so when you release earnings with that revenue that you've paid 5 times for, they are not adjusting for that acquisition in your P&L. And so likely are you getting valued at 10 times on that revenue, or a mix between or something close to that in your next, or with your earnings. So, if you can buy revenue at a lower multiple than you trade yourself, then that's obviously accretive. And with the larger companies in crypto also typically deserving a premium, and people being absolutely fine with that and cognizant of that fact, there is just a multiple arbitrage opportunity for players that are public, but quite frankly also for players that are yet to become public and that know they're going to measure it, that they're going to be valued at a higher multiple than today they would pay for.
Interesting. Okay, so I can already tell this is a quite layered like initiative and like sort of domain to like really like there are levels to this game, let's say. That's very
Totally.
interesting to see.
We're seeing basically multi-billion-dollar revenues on chain now. Call it hyperliquid. A few new protocols are annualizing. call it pump fund or new protocols on that matter. What would you say we see in the TradFi world? A lot of these companies, like you just mentioned, revenues you can buy it for lower multiples that will boost your overall earnings call, and that will look better on your balance sheet. What would you say overall for more Web3 native M&As would be success? Would it be similar to TradFi, or would it have different measurements or metrics?
Yeah, I think the underlying drivers or success vectors for a transaction, I think universally apply to any industry, but I wouldn't limit them only to, I guess, increased financial performance. Those could also be just very strategic in terms of value chain. They could, for example, also protect your own business by internalizing non-revenue generative parts of the business that are just much more secure to have in-house versus relying on external data providers or service providers. So that's a strategic move that some of the larger players have done in the past. MetaMask or Consensus acquired WalletGuard to internalize a security team and the basically services that were previously provided to them. And that I don't think was driven necessarily for the revenue that the business could generate or the financial performance I would add, but really to secure the core business. And I think especially in sort of crypto today, you have some strong verticalized players that clearly tap out in terms of market opportunity, or also in terms of margin upside and growth opportunity within their vector or sector, right? And so these guys are now trying to also vertically, integrate into other vectors via M&A and just build a portfolio of operations. And I think a hypothesis here would be for some of these larger on-chain organizations also to come out really as hubs, around in and around their core operations. So yeah, I think I love how you're thinking about it already, and some of these larger, very revenue generative and strong financial on-chain organizations. And yeah, I think on our side we can't wait for those guys to become active, or certainly more active in M&A, and then also I think we'll start observing what is really then perceived by the market as a successful transaction, and whether that differs a lot to traditional markets. I guess hypothesis right now would be less so, but maybe there's nuances to it.
Right. I think the on-chain apps, I think like on-chain apps M&A could maybe even be like an accelerated pace compared to traditional market, just because the churn of these apps, like Pump Fund, just in 1 month it's like the gargantuan leader in the space, and then it's now it's like, I think it's like below 20% of the fees market share today. So it can just happen so fast. Like you can't rest on your laurels. Even like you have Axiom, like the front end trading thing. For Solana Beam coins, made like 150 M this year. Like it's doing great. But I mean, we've seen like a bunch of these like trading terminals like come and go and make a bunch of money, and then like they're always one-upping each other at a pace that it like doesn't like that'll take years to play out with like an app or company in traditional markets, right? So I think they might feel like that pressure to do something, right? Like Pump Fund especially, right? Like their tokens like trading below ICO price, right? So it's like, okay, we gotta like KOL scan wasn't enough. Like we gotta ramp it up a little bit, show people that like, all right, we're actually serious. We're not just gonna lose out to this, bonk fund thing that popped up like in a month. So I think there could be more pressure for the on-chain apps.
Yeah, and I think for some of these people, it would also help de-risking, the one trend that they may be riding at that point, right? Like if in crypto, if you're if you're right on timing and narrative, then things can escalate very quickly, as you were saying, right? But it's very uncertain whether you will always stay at those elevated levels. But it's a great way for you, obviously, to bootstrap initial momentum and initial financial firepower. And if then used strategically relevant and smart, then you can obviously diversify away from your core business in a very meaningful way, also showcasing that there is more behind this one narrative, this one theme behind the organization, and just making your business, I guess, less cyclical or less prudent. Yeah.
Right. Yeah. I mean, I think we've seen examples kind of this. Like I've already used the pump fund example quite a lot, but yeah, like they're like, saying that they want to venture into like social, like the social application space. That's definitely not in their, current domain of expertise, right? And even things like EtherFi, kind of getting out of the risk-taking realm, going much more into like the consumer like
Exactly.
payment space. It's like, how can we get a foothold here? Yeah, M&A could definitely be, especially for pump fund and EtherFi, like they've made like real revenues, like they have the money. So I think I definitely agree on the like diversification standpoint, or maybe even more like of an active, maybe pivot would be too strong of a word, but like very like conscious, like, hey, we want to like expand much more, expand past what our current source of revenue is.
100%.
Fascinating discussion. Call. I want to be mindful of time here. We do need to wrap it up, but before, I mean, you shared a lot of insights about mergers and acquisitions on the industry at large. But I'd be curious to know also what's going on with Areta. Any cool things on the horizon? Um, are you planning any acquisitions? Maybe. No, I'm just joking, but give us an update. Like what's next for you guys, and also like if people are interested, where can they follow you, reach out, get in touch, things like that.
Yeah, no, totally. And you know, I know like it would be hard to be exactly that company or that player, but we're certainly looking forward to the bear market and then finding out whether there is any opportunities for us, to do or to apply what we do for a living, also for our own core business. Um,
That's
we will
cool.
probably wait out now and then focus on doing business or getting deals done in this type of the market. But there may be other times, and then
That's smarter.
maybe let's see,
Buy
right?
low,
But
sell
other,
high, right?
yeah, exactly. I mean, not that we would be sellers, hopefully at any point, but let's see, right? And the reality is, there's so much organic growth for us that we're constantly looking for great minds and strong people with either consulting or investment banking background. So also to the audience, if you're either still in traditional finance and you're looking for a way to break into crypto and want to do that in an environment that combines the two, then I think Areta is a great place. We're pushing on really all edges when it comes to innovating also the investment banking or service industry for crypto. Token M&A is probably the most exciting field. We're trying to advance, and then we're really trying to become a stronghold. And if that is ever a topic for anyone of your audience, please just never hesitate to reach out to anyone on the team. My email is carl@areta.io, so very simple. Drop me a line if you ever want to chat M&A. We also do very cool stuff on the secondaries front. So if you have or you or your institution want to become active as a buyer or seller of secondary positions in either equity or tokens, never hesitate to reach out, please. And also on the on-chain services side, whenever you're facing a tricky strategic decision-making process, whether that's dealing with your investors ahead of a token launch, thinking through a strategic raise before, after, or during the token launch, whether that's structuring your labs and foundation relationships, then we have smart people in the on-chain world to be covering those topics with and for you. And Otherwise, I think I'm hoping for a lot of, I mean, certainly for our paths to cross again, but I'm sure also with your audience. And yeah, I mean, we're going to stay tuned on sort of where the market is headed. If you follow us on LinkedIn, Twitter, or just subscribe to our newsletter on the website, then you can also follow us live as we build towards basically the crypto native investment bank.
Excellent. Well, you said you're not doing any acquisitions yet. You're going to wait it out, but it does sound like you're aggressively expanding. So that's good. That's great.
I think
Carl.
that's a good summary.
Yeah, basically, right? Carl, so nice to have you. Really insightful. It was very instructive. I really enjoyed this conversation. So yeah, thanks for joining us, man.
No,
Yeah,
so did I,
thanks for
and
hopping
thanks
on.
for having me. Great conversation, and let's definitely repeat it in the future.
Let's do
Yeah,
that.
great to have someone provide color on the M&A space. I think there's not many people with that kind of like insights.
Awesome.
Awesome.
Thanks, everyone.
Thanks, guys.
Thanks,
Also,
guys.
I want to thank the audience, guys, everyone. Thanks for being here. So, as you can see, market cap is where funds and firms provide their insight on the latest market developments to you, our audience of institutional investors and traders, as well as industry professionals. For daily updates on current events, you can join our daily Intel Telegram channel. Link is in the bio. And you can join our next show, of course. We're live every Thursday at 10 a.m. Eastern Time on both X and YouTube. See you on the next market cap. Thanks, everyone.
Thanks, everyone, for tuning in.